Let's talk about Q2 Holdings, ticker QTW. They just had their Q3 earnings call, and wow, did the market react. It sent a massive signal. So in this breakdown, we're going to unpack exactly what that signal was, and more importantly, what it means for the stock from here. And let's just start with the headline. The morning after they reported, the stock rocketed up almost 15%. And get this, it was on more than 3 times the normal daily trading volume. So, the market wasn't just sort of nodding along, it was shouting its approval with a whole lot of capital. The big question is, why? What did investors see that they loved so much? Okay, here's how we're going to break it all down. First, we'll look at the Q3 snapshot, the raw numbers that got everyone so excited. Then we'll dig into management's new game plan, what we're calling their pivot to offense. Third, we'll analyze the market's reaction, the verdict, if you will. And finally, we'll give you the next call, our own rating and thesis on where QTO is headed. All right, let's dive right into the results. To put it simply, this was just a fantastic quarter. This wasn't a little bit better than expected. It was a clear and convincing beat across the board. So check out the scorecard. On the top line, revenue came in at over $201 million, when Wall Street was only looking for about $197.5 million. Nice! But the real story, the part that really gets investors fired up, was the bottom line. GAAP EPS, 23 cents. The estimate was 14 cents. I mean, they didn't just beat it, they absolutely crushed it. Same story with non-GAAP EPS. This was a total outperformance, plain and simple. But honestly, revenue is only half the picture here. The key takeaway, the thing you really need to know, is all about profitability. Their adjusted EBITDA exploded, jumping 50% compared to last year. 50! And that drove their EBITDA margin up by 560 basis points. That's a huge deal. It shows they're not just chasing growth for growth's sake, they're delivering highly profitable growth. That was the drumbeat from management on the entire call. And it really looks like this momentum is built to last. The company's total backlog, they call it remaining performance obligations, grew 24% to a massive $2.5 billion. Now, for an investor, this metric is gold. It gives you clear visibility into revenue that's already been contracted for the years ahead. It's a huge confidence booster. So the numbers are obviously great, but what's the strategy behind them? Well, the big message from the call was a clear shift in mindset. It feels like the company is done playing defense and fixing things. Now they're confidently going on offense. And this isn't just talk, right? They've got the results to back it up. Management announced a record quarter for bookings. They landed 7 major deals with big Tier 1 banks. And to really signal their confidence, the board authorized a new $150 million share buyback. That's a loud and clear message that they think their own stock is undervalued. Now, a huge part of this new offensive game plan is artificial intelligence. The CEO, Matt Flake, couldn't have been more clear. He basically said that AI innovation in banking is going to flow through their platform, not bypass it. They're already rolling out things like AI copilots and AI-assisted coding tools, trying to position themselves as the essential hub for this technology. And to make sure this new strategy works, they're shaking up the leadership team. Hema Mukamala, who was leading their AI charge, is now the COO, which links their tech and operations directly. And Kirk Coleman is taking over as Chief Business Officer to unify their whole sales effort. So this isn't just shuffling deck chairs. It's a very deliberate move to accelerate everything, both technology and sales. So the company's story sounds pretty great. But how is the market really seeing it? Because, yeah, the immediate reaction was euphoric. But if you zoom out a bit, the stock's longer-term performance tells a much more complicated story. And here it is, the core tension for any investor looking at Q2 right now. You've got this amazing near-term narrative, a 15% pop on a blowout quarter. But you have to set that against the long-term story, a stock that even after that big jump was still down about 30% over the past year, lagging way behind the overall market. So what does this tell us? It tells us the market is in full-on show-me mode. Investors are basically saying, hey, we'll aggressively reward you for a great quarter, we see what you're doing, but, and this is a big but, that trust has to be re-earned after a long stretch of underperformance. They have to prove that this isn't just a one-hit wonder, but the start of a new, consistent trend. Okay, this brings us to the most important part, the next call. We've seen the impressive numbers, we've heard the new strategy, so the question is, what should investors expect from here? Let's just put the question out there directly. After this breakout quarter, is Q2 Holdings a buy? Has this turnaround story finally become real enough to act on? Well, let's look at the two sides. The bull case is pretty compelling. If they can keep expanding those profit margins and actually start making money on their AI products, there's a lot of potential upside. The bear case, though, it all comes down to history. Any stumbles in execution could immediately bring back all those old doubts about their consistency.
So, after weighing the catalysts against the risks, our rating on QTWO is outperform. We really believe the evidence from this quarter, especially when you combine it with their forward guidance, signals a tangible, positive shift in the company's path forward. And our outperform rating is really backed up by management's own forecast. I mean, they didn't just beat Q3. They raised their guidance for the full year, and they gave a preliminary look into 2026, where they're targeting 13.5% subscription growth and another 250 basis points of margin expansion. That's a multi-year blueprint for profitable growth, and that gives us real confidence.
So, it looks like this pivot to offense is the real deal, but you can bet the market will be watching like a hawk for consistent execution in the quarters to come. And that wraps up our breakdown of Q2's earnings. This is not financial advice.